Alright, traders, a very good evening to you all. This is Avril from the Tradepsyche, and I welcome you all to the post market analysis, outlook, and expectations from the market for tomorrow. Alright, so in this video, basically, we'll discuss about how was today's market, what discussions we had in our Telegram group, and what discussion we have had in our weekly analysis video, and what things we anticipated, whether the markets went according to that or not. Right. We'll also discuss about gold, crude, and silver levels, right? And apart from that, we'll also discuss about the change in OI data. The adjusted change in OI data comes after 7:30, but still we'll discuss because it gives you a very near to picture. It does not gives you a perfect picture, but it gives you a very on a brief that what is the actual change in OI data, right? It is not adjusted data, but you can have a sense of it that what actually the data is, right? So we'll start the discussion. We'll go to Nifty's chart, but we'll first see that what discussions we have had in our Telegram group. But before going to our Telegram group, I'll leave the link to my Telegram group in the description box below. Do check it out. In that Telegram group, basically we give intraday guidance to traders who are not sure about the market, that whether to trade bullish, whether to trade bearish. Right, if you are an intraday swing positional, whatever kind of trader you are, do check that group out. We share live OI data change analysis, whether the data is being built bullish, whether the data is being built bearish. And it's not a trade sharing group, it's a trade building group, right? So if you are someone who is new to trading or who is looking for a guidance in trading, do check it out if you believe in our uh, analysis, right? So let's start with the discussion. First we'll go to the Telegram group. So the morning we started, and we analyzed that the data is bullish. So major support at 25,500, no near major resistance got changed, right? So now we have to focus that tomorrow will be monthly expiry of Bank Nifty, Nifty, Mid Cap Nifty. Basically, the stock markets February monthly expiry will be tomorrow. Right, so we'll discuss from that perspective also, that whether tomorrow we can expect a, trending expiry or maybe a sideways expiry. But yes, we have to see the option chain data, right? So today morning we discussed that good supports can be seen at 25,500 to 300, maximum resistance at 25,800 and 26,000. But since this is February expiry data, this can be very volatile. Sudden supports and sudden can be changed to sudden resistances. FI's future index positioning, FI's continue to unwind short from the index, keeping a bullish stance. Uh, in the participants wide data, in the conclusion we mentioned, as clients are heavy bearish, FIs are long, we can see a buy on dips market. All right, but one very strange thing which has happened today is, although Nifty has closed up 141 points up, but the March futures, if you see, they have closed only, I think, 110 points up. So this is telling me that yes, there is some unwinding of long in the future, or maybe it is just because of one day. Tomorrow we might see futures rising more than the spot, right? So it does not matter that much, but it's fine, right? But the point which I wanted to mention today is, according to GIF Nifty, today we were about to gap up around roughly 200 to 50 points. As per our last weekly analysis video, right, which we did, we analyzed here that we might be opening somewhere around 25,800, 900. So if you remember, we discussed three cases: big gap up opening, big gap down opening, and a you know opening in the range, right? So we mentioned that as per GIF Nifty, we are opening roughly around 200 points, and our whole strategy was based upon that. But technically, Gifty opened roughly only, I think, 100 points up, and even in that opening, even in this bullish opening, the banking and the IT was negative. IT is negative, that is understandable. I have mentioned the reason that why Nifty IT is going negative, but banking, I was not sure that why Nifty Bank went in negative, right? Even though uh, if you see, I'll take you to probably GIF Nifty's chart. What happened, I think Friday night, is the US court, it made the US Trump's tariff illegal, and due to that, this whole fall got retraced in the evening session when the US markets were open and Indian markets were closed, but gift nifty was operational. Gift nifty went almost 300 points up. So in today's morning session, we corrected 100 points, 180 points, I think so. If at all you want to see how many points we corrected from the top, from 880, 890 to roughly 620. So almost roughly 180 to 200 points we corrected in Gift Nifty. So that's why we saw a very, only 100 points opening. Right. So as per our discussion in our Telegram group, then we mentioned that the plan is, so as per the discussion in weekly analysis video, healthy longs will only come above 25,880, right? So the whole day we did not come above 25,880, so we didn't even go long, right? The last level for bulls to save is 25,370. If 25,370 breaks, expect fresh breakdowns in all the indexes. No trade range will be 370 to 880. Yes, it's a big range, but if you even see today, the markets did not do anything, right? For I think it fell. We'll discuss that what exactly has happened today. Then we mentioned that silver all targets are complete. Then we mentioned a nifty IT chart, that what it can do over the long term. Then we mentioned some of India VIX not crashed even after trade deal issues, right? Then we mentioned that Y data. First our Y data, Nifty IT going bearish, 25,625 will be days low. So 25,625 was days low actually. And the markets, when it came to that, so I'll explain this point, that why do we focus on Nifty's day low, right? So I think today and tomorrow will be like this only. Markets have seen enough volatility now, they want to stay calm for some time. So this will be apt time to initiate March monthly triangle, which we do, right? Which we teach our traders that if the markets are going sideways, you can take the benefit of the time decay, which is the theta decay, right? So this was the whole discussion, and today if you see, we opened roughly around 620, 650. This was the opening point, right? If you want to see, this was the opening point, 670. We went till 770. We actually rose 100 points post the gap up, but then I think the same drill happened. We slowly kept correcting, and the moment we broke, I think 25,700, it seemed that yes, the markets will go bearish, but we did not break prior day closing. So exactly today, the day low, which was marked at 25,620, the markets came till that, but markets trapped the sellers and it went above, right? So from technical perspective, understand this one thing. See, I'll go to hourly time frame. All right, and I'll probably change my view to make you guys more understanding, right? See, now whatever the day low forms, how a day low is formed is, markets, if you go on a shorter time frame, the markets, right, it opens at this point, the low of the first 15 minutes candlestick. If at all it is not breached in the first 2 to 3 15-minute candlestick, it can be considered as a day low, right? So whenever a day low or day high is breached, so many people use this strategy or use this setup. What they do is they mark the high and the low of the first 15 minutes or first hourly candlestick, and in whichever direction. Even if I go to hourly time frame, what was the first hourly time frame? First candlestick of hourly, 25 770 and 25 6 30. So this is the setup which many traders use, is they mark the high and low of the first hourly or first 15 minutes candlestick, and if it is getting broken, if it is getting breached on any side, they will trade in that direction only. So today the day low, the first 15 minutes candlestick or first hourly candlestick, each and every point was 25,630. And whenever the markets open in the morning, right, how the day low is formed is many buying orders come at this point of time. So whenever the markets will hit this point back again, the markets will try to go up. See, the first time it hit this, it went up. The second time it hit this, it went up. The third time buyers got more strong, it went up. But if it would have hit the this level for the fifth time, it would have broken on the downside. Because if there is a support level in the market, and if it is hit, it is being hit multiple times, then it becomes weak and it finally converts into a resistance and it trades like this. Getting my point, right? So this is what essentially happened today, and I'll change back my view. I'll bring back my moving averages, right? So we opened, I think, 100 points gap up, then we went till I think 150, 180 plus, but we came down, and from 11 o'clock, as we always mention that it is the time of the sideways market, we till from 11 till exactly 2 we stayed sideways, and then exactly at 2:15, 2:30 we broke out of this trend line. So from morning the markets were forming this trend line, right? And exactly at roughly 2:30, which is from we always discuss this, that from 1:30 to 2 3 3:30 it is the FIS time. So exactly at that point of time we broke out, right? So this was exactly what happened today. And as per our last discussion, we'll start the discussion for tomorrow, right? We'll go to daily time frame, right? So I'll remove all these levels, right? So as per our discussion, the strategy which we discussed is, in the weekly analysis video I specifically gave that uh, you know strong bulls or maybe a healthy bullish trade will only come above 25,880. So we were expecting that the markets will definitely open around 25,880. If after opening, if we sustain roughly around here and we start breaking 25,900, the first trade we will take till is 26,000. This is what we discussed, but this didn't happen because we opened roughly, I think, only 100 points gap up, right? But we also mentioned that any healthy bearish trade will only come below 25,380. This is what we discussed in last weekly analysis video. I'll go back to daily time frame, right? So still now we are in the range of prior this big red candlestick. So there are essentially two swings now in the market. This is the first swing and this is the second swing. So unless the markets they do not cross this swing, we cannot see a trending move, right? So what will be the strategy? So today the markets have closed above prior daily high. So technically from daily perspective, the stance can, for the short term, it has changed to buy on dips. Now unless we close back below prior daily low, we cannot short the markets, right? So let's suppose if tomorrow's candlestick is like this, then I think still we cannot short, because our shorting level will be 25,370. Because in that case, if at all we short the market, we carry it, what if we might see a candlestick like this? So unless we do not break these two ranges, do not touch the markets. Build that discipline in yourself, right? Don't be in the in a don't be in a mindset that, oh, I'll miss these many points. No, even if you miss, you'll have, I think, 500 to 1000 points above this point to capture. So don't be in a hurry, don't be a FOMO trader, right? Bring that discipline in yourself, right? So now for tomorrow, the levels which you have to take care on the upside is exactly 25,770. Above 25,770, if at all we close any hourly candlesticks tomorrow, because this was days high, there will be many call sellers which will be accumulated at this point of time, if at all any early candlestick. And one more thing, I'll come back to this point, but have you seen, I have told you in my analysis videos many times that this is a very very famous price action: weak candle, weak candle, weak candle, candle with wicks basically. So it is countered by a strong candle. This hasn't this exactly happened today, right? And even this the same thing you can see on the daily time frame. Weak candles with big wicks, it means these candlesticks are weak, this trend can easily break down, right? So let me go back to the hourly time frame and make you understand that how to interpret, how to read price, how to understand price, right? So these were candlestick with high wicks. It means both the bulls and the bears were confused in the market, and generally all these weak red candlesticks, whether these would have been green candlesticks like this, I just made you see on the daily time frame, it would have been countered by a big red candlestick. So this is a very famous price action. So whenever you see weak candlesticks back to back weak candlestick, it will be countered by a strong candlestick in the opposite direction, right? So now look from your perspective that where are the major call sellers today accumulated at this point of time in shorter time frame, and in larger time frame at this point of time, at this point of level, right? So the essential level for upside for tomorrow will be 25,770, but I would not prefer to go long exactly above 25,770. We have mentioned that the markets are trapped in a range, right? So it might be possible that the markets might reach here, you think it's gonna break out, but it is falling again. So don't get trapped in this range. Yes, if the markets are crossing 25,770, it is the first sign that yes, markets are trying to go bullish, because from so much time, from so longer time, the markets have not given any trader a good bearish or bullish opportunity. So if at all a bullish move has to come, it will come very concretely, very aggressively. So you have to wait till that point. So above 25,770, you can see 25,880, 900. But above this level, above this zone, you can essentially see 26,000, and above 26,000, the markets will rocket. Right? So you just have to wait for a cross of Nifty above 25,880, 900. Any early candlestick above 25,880, 980, initiate a long here, keep a stop loss at prior daily high. This much stop loss, and trade for these levels. That's it. And today the markets have given a good close at the end. If you see, the first point is technically the markets have closed above prior daily high, and if at all you see, the markets have taken a support from 25,600. So this can be a green zone for tomorrow in the markets. All right, so unless and until this green zone breaks down, don't even think to go bearish on the markets. And from our weekly analysis perspective, because that analysis, it continues for the whole week, we will not short the market unless this, the level of 25,390 breaks down. If you are a pro intraday trader, and if 25,600 gets broken down and any early candlestick sustains like this, trade for this move. But be cautious that the markets have taken a very good support at this point of time. The markets can give you a sharp pullback. Getting my point? But if you are someone new, I won't recommend shorting the markets on the breakout 25 700 25 630, sorry. Right, since I think the second half of the session today was a good bullish session, I am expecting a good buy on dips market tomorrow, but it really depends on the data today, right? So still we are in this range, and if at all we go on early time frame, what the Nifty is trying to do is, I'll make you see this Nifty, right? It is stuck in a channel. Let me go back to slightly more longer time frame. If at all you remove this volatility period, so Nifty is kind of stuck in this channel. Now I'll go to early time frame, right? So Nifty is kind of stuck into this triangle pennant, and I think Nifty is looking to break out from this triangle on the upside, right? So now, unless and until we close below prior daily low, or we close below 25,370, we cannot think to short the markets, right? So don't unnecessarily form any bearish opinion, either a bearish opinion or a selling opportunity, unless and until markets give you some sign, right? So bearish opportunities tomorrow will only come below 25,370. Bullish opportunities can easily come tomorrow above 25,800 or 25,900. But above 25,800, you will first get a level till 25,880. Since this is a neckline of a W, if you see, this is a W which is kind of being formed here, right? So this will be the neckline of this W. Above this W, above this 25,880 level, you can target 26,000. But above 26,000 only you can see a real upside in the markets, right? What will be the negative case scenario for Nifty? A break below 370, oh sorry, a break below 25,630 can be the first sign of bearishness. But unless and until either 25,500, because 25,500 is a psychological round number level, if this breaks down, I think 25,390 is very certain. But the moment 25,400, 25,390 breaks down, I think we can see 25,100. All right, so the no trading range for tomorrow will be the same, 25,390, 25,900, because essentially the market has not moved a lot today. Going to Bank Nifty has also given a bullish price action, but it has not closed over prior daily high. So for Bank Nifty, the levels are very clear above, I think 61,500 and 61,000. 500 point range, do not trade this move. Below 61,000, 6,500 and 60,000. Above 61,500, 62,000. And once I think this high is getting taken out. This we discussed in the weekly analysis video. 161, 600, 700 gets taken out. I think you can easily see 62,000 and 63,000. All right. Let's go to early time frame and discuss. Okay, we did not discuss that on the basis of opening how to trade Nifty. See, we have this, if at all on a larger perspective, we have this range of today. Let me mark this range for you guys. Unless and until we do not cross this range, don't try to trade the markets. If at all we are opening, okay, I'll bring back my levels. It will be easy to understand. If at all we are opening a good gap up above 25,770, 25,800, like roughly like here, don't try to short the market. The market can be a buy on dips because tomorrow will be Nifty 50's expiry. The markets will have will have a high probability of catching a trending momentum. So if any concrete level is getting breached, don't try to fight that trend. If at all we are seeing a breach of 25,600, 25,500 tomorrow, can be a bearish trending day. If at all we are seeing a breach of 770, 800, 880, it can be a bullish trending day, right? It will subjectively be dependent on tomorrow's morning's premiums, which we discuss in the market in the live trading hours, right? uh, if at all you are opening a big gap up, look for barn dips opportunities only above 25 880, 25 900. Do not look for sell on rise opportunities if at all we are opening a big gap up. If at all we are opening a big gap down, still I would not be in a favor to short the market. Why? Because we have multiple supports on the downside. First support is 390, second support is 25 100. Sorry, first support is 25 630, second support is 25 390. So I'll only be looking for shorting opportunities below 25 390. All right. So for in perspective of banking is looking decent. Same, if at all we open a gap up, look for buy and dips opportunities. If at all we open a big gap down, unless and until I think 61,000, sorry, not 61,000, unless and until 6580 is getting broken on the downside. Yes, 6580 is getting broken on the downside. Don't short the bank nifty, right? So let's discuss the option chain and OI data. So if you look at the option chain for tomorrow, the IV is decent and the premiums are also decent. So the premiums have not decayed. Generally, if at all traders are expecting the markets are expecting a sideways day tomorrow, then these premiums would have looked like roughly around 60-50 on both of the sides. But the premium is decent. Everything will be subjectively analyzed in tomorrow's morning's first hour, that are the premiums decaying or the premiums are staying decent. If the premiums are staying decent, I think we can see a trending move. So this also be analyzed in the live market in our telegram group, that how the markets can move, whether it can be a trending expiry, whether it can be a sideways expiry, right? So now if you see, the future price is roughly in discount, so it is implying that slight negativity is there in the markets. The future price should not be in a technical backwardation, but it is very much near to expiry, so it is slightly justified, right? Right. So looking at the premiums, I'm expecting a decent move tomorrow, and the major call sellers are currently at 25 700 and 800. Above 25 800, it's a short move till 26,000, but 26,000 has so much call OI, it seems difficult that tomorrow 26,000 will be broken out on the upside. But good supports are also at 25 700 and 500, right? So it will be a tough good competition tomorrow. In the live markets, we will only analyze that whether the premiums are being decayed and we can see a sideways expiry or not, right? Let's go to OI data and discuss that change in OI data today. 2.8 CR addition of longs have happened, and 2.37 addition of shorts have happened. Slightly, very slightly more longs have been added than shorts, which indicates a very small bullish bias. Although I would rather consider it, a neutral data. Right, for tomorrow's expiry, if at all you want to see today, slight short covering has happened at 25 600, which is very natural because we are at 25 700. But the next resistance is 25 700. Still, call sellers are heavy at 25, are more than put sellers, which means that still it's a valid resistance, right? Today a good support has been added at 25,500. For Bank Nifty, the change in OI is slightly bearish because we are seeing slight addition of shorts, which are slightly more, not slightly, but in a decent ratio, in a decent, with a decent percentage. It is more, I think 30% more shorts have been added at than longs, so which gives me slightly bearish vibes from Bank Nifty. And maximum resistance today has been built at 61,500. So we were discussing the same, only above 61,500 only you are expected to go long in Bank Nifty. That's what we discussed on the charts as well, right? So let's start the discussion for gold, right? Let me go to gold chart, right? So March futures are about to expire, so we'll discuss April futures, right, traders? So gold, as we have been discussing from past 3 to 4 sessions, it is in a very bullish trajectory, right? And we discussed for gold April futures, right? The moment we will capture, I think 157, a move till 158, 160 can come. But real bullish move now, if at all we sustain above 160, can come till 162, 165 and 170 within next 3 to 4 days, right? So do not try to short gold unless and until we break down below, this is a support, this will be a support level unless and until we break down below 157. All right. For silver, we'll also open silver's April futures, right? For silver, the same strategy. We discussed that silver will be bullish, and silver has today has given a breakout above 264 and 270. So keeping 270 as a base, keep a buy on dips approach unless 270 is broken on the downside back again. 280 has been touched. Above 280 you can consider 290 and 3 lakh target for silver, right? So maintain a buy and dips strategy for silver unless and until we break down below. And if you, on a longer term, if you even look at the price action, just remember, in the world of trading, that every good fall comes after every good rise. So the good rise happened, good fall came, now the markets are consolidating, right? So the good fall has happened, a good rise is pending, right? So do not unnecessarily think of shorting the silver or maybe gold, because they are in a bullish trajectory. Let's go to crude. Crude is slightly going on the bullish direction, although the inventory data which came as negative, but this spike was totally because of the US Iran war news. So unless and until there is a relaxation in the Middle East, there is a relaxation in the Iran, I don't think crude's gonna stop. So the level for crude is short below 5960. Below 5960 you can easily see 5920 and 5900. Below 5900 you can see 5800. But aggressive long will only come above 6100, which is the red candle. Above 6100 you can see 6150 and 6250 as the next targets. All right, so this was the discussion for Nifty 50, Bank Nifty, and our commodities, right, traders? We also discussed the change in OI data. If you have liked the analysis video up till now, leave a like, leave a message. Cheers, stay safe in trading.